Cohen. I have been lucky enough to be in the payments industry for 24 years, and it only happened to be because I lived in Atlanta, and that's kind of where it grew up. I actually started as an ISO. I came out of business school. I thought I knew everything in the world, and I had a credit card, and I decided to go hawk terminals around. Since then, obviously, my career has changed a little bit. But today I'm going to talk to you a little about the evolution of commerce and obviously where mobile fits into that. It's been an interesting ride for me in the payments ecosystem. I'm at Paya now. We're a $30 billion processing business. We literally just bought this business a year ago, rebranded it, and have made a couple of small acquisitions since to kind of really focus in more of the business services segment. So a lot of card not present business, but more businesses than retailers. But I've been in the space. I've been the president of the Electronic Transactions Association. I've been at Global Payments. I ran all of the U.S. for Moneris for years. I was at Cayenne. It was just sold to TSYS for over $1 billion. So I've done a lot of stuff. And what I always remember, interestingly enough, was a conversation I had with John Donahoe, who used to be the CEO of PayPal, about 5 years ago, and he was at a conference. And this is when they were launching PayPal Retail. And that thing pretty much bombed, right? But he said, in the next 3 years, you will see more change in the payments industry than you've seen in the last 20. And the funny part is, 5 years later, I can still say, in the next 3 years, you will see more change in the payments industry than you have in the last 20. And mobile's a piece of it. And I know this is a mobile conference, but to me, I don't think about mobile as a standalone instrument, right? I think about, and we'll talk a little bit about it, how the consumer behavior is changing the way that we think about the experience around payments. And to me, that's really different. So when I started back a long time ago, and that's why I shaved my head, by the way, because no one can tell you how much hair you really have. Our job was to go out and pitch little terminals. And I was kind of this start of the wave of ISOs. And when we first started in this industry, people got payment processing by walking into their bank. It took them 5 days to get approved, just like buying a car mortgage or a loan, to get a merchant account. And then ISOs came along, and I realized, oh crap, I'm not just a bank. I don't just take orders. People can actually sell this stuff. But back in the day, also remember, we were going. Who remembers people looking up on little cards and saying what numbers might be fraud, and then they'd go to the bank, deposit the slips, and it'd get put into their account 3 days later. And then we came, Verifone popped out with the first Zon Juniors, and the world changed. We had electronic data capture. How exciting, right? We implemented MagTech technology, right? Mag stripes, how cool was that? A 50-year-old technology we implemented in the 80s. Pretty cool stuff. So that kind of moved along. Then we went into the world of gateways, right? How could we switch transactions, and how could that go? And then we went to the world of where all these software things started integrating, right? So you went from that to these MPOSs and POSs and all this stuff. But as we look forward, that's all changing, right? EMV, everybody thought was going to be this catalyst. How cool was it that in 2015, we implemented a 20-year-old technology into the payments ecosystem and put us back another how many years? But it did start thinking about what's changing at the point of sale. And people were making investments. You're talking about a $20 billion getting poured into the retail infrastructure in the United States, and that's just the start. Because everybody's moving to the cloud. They got to get out of what they're currently doing and thinking about better experiences. You talk about mobile. How does mobile fit into this? Mobile is growing like crazy. We all know it. We all live it our lives. We're tethered to our phones. I am. Mine just happens to be up and sitting up here right now because I can't do this presentation with it. But when you look at phones compared to electricity, how important it is. If you left your house today without your wallet, how long would it take you to realize you left? If you left your house without your phone, you'd know it in about 2 minutes. You just kind of think what's important. But when I think about commerce now, I think about the consumer. Because what our job is, at least I sit in the acquiring side of the world, and I have for my entire career, I have to serve the needs of merchants or businesses. And when you serve the needs of the merchants and businesses, where are they going? They need to serve the needs of their customers. And whether it's a business customer or a consumer, right? They are shopping and doing things differently. Today, you shop on Google or you shop on Amazon. We didn't do that 5 or 10 years ago. Consumers didn't shop the way they do. Business buyers didn't. There weren't review sites, 10 years ago, right? You went to the yellow pages, you got a bunch of mailers that came in. All of that has changed. So what the consumers are doing is different. So you have to support where the consumer is in order to serve the needs of the business. And the interesting thing is small business shoppers are shop the same way consumers do in many ways. And what happens is the ask becomes different, right? If you think about the way payments has evolved, it's actually now, if you think about who's taken an Uber or a Lyft, I know Lyft's a sponsor here, in the last week. You don't think about paying, right? You think about a great experience and then payments kind of happens. And so when you think about where payments fits, to me it's just a subset of some new commerce experience we need to do to manage to the new consumer, right? And so payments is really just a small subset of what happens when people shop and then they engage and then the actual payment transaction happens and then you repeat it and how do you optimize it? Analytics, data, loyalty, things like that, right? So payments is one little subset, but it's got to work across all 5 of those ecosystem points. When I started in the business, I told her it was 5 days to deposit, 5%. And so the pitch to the merchant was pretty easy. Take this little terminal and, I'll charge you 3%. I'll lease the thing to you for $79 a month forever, but you're going to get paid tomorrow. And you're going to pay half of what you paid before. Pretty easy pitch. Help me accept payments. The solve now is different when you talk to it. It's help me grow my business. It's not help me accept payments. And so as you think about where mobile or commerce fits and payments being a subset of it, the solve is totally different when you talk to the business. The industry itself, though, has some great headwinds ahead of it, or tailwinds, rather. And it's all driven by what's happening in the ecosystem, right? You think about, you've got internet ubiquity almost everywhere. I know someone had a conversation, we were talking about it yesterday on my panel, and said, well, what happens if another Puerto Rico disaster happens? Well, that's a bad thing, because everybody's now connected to the cloud. You don't want to think about it, but we have connectivity all over the place we go. These cloud-based solutions are really starting to pop up, and it's not just the Squares and the Revels and the Clovers anymore. Major infrastructure solutions. If you look at some of the new things that, why did Oracle, Oracle, NetSuite, you start to see some of these solutions really permeate what's happening. All these things are moving to the cloud. Security and compliance still at a foundation, but it creates huge opportunity because people need to retrofit what they have to get more security and solutions, but it becomes table stakes. And then the data. I'm sure a lot of people here have talked about what happens in the retail environment, how you can use that to optimize payments transactions. And so then you get the secular impacts that come along with that, all driving some great tailwinds around commerce. But I will tell you, the next 5 years are different than they were 10 years ago. 10 years, all ships rose, right? That was the difference. When we launched debit into the US, when we had things like that happen, all acquirers, all payments people, everybody won. In the new world, because the consumer is so different, there's actually going to be winners and losers. If you're not preparing for the future, you're going to be left behind in this new world and where all the new opportunities are. I think that's why you start to see so much M&A activity, because some of these bigger companies realize they're going into a gunfight with a knife, and they need to buy some of this stuff to enhance what's in their arsenal. Payments is still growing by massive, by a good chunk across the globe. You're talking about almost $30 trillion, in the next few years. But when you start to think what's driving the growth, it's all e-com mobile that's driving all the growth. If you think about 15% of all that retail in the US is going to be done in card not present, and half of that is going to be done off a mobile device. So I know we sit here and talk about tapping, right, or tapping or doing a mobile transaction at the point of sale. We all know that's taken forever to get through because of this messed up ecosystem we have. But almost every lunch I order today, because I'm generally not sitting down for lunch, to me is done in a mobile environment. Card not present, Panera, you name it. That's how I'm buying my lunch today. And as I shop and things like that, it's just so much easier. You're going to see much more card not present transactions done in a mobile environment, I believe. And I think that's the greatest use case around is, shopping cart abandonment is one of the biggest problems we have in e-commerce and in mobile commerce. The ability just to touch my finger or look at my phone and have that all happen eliminates the abandonment issues that we've got. So you look at where the growth is really coming from, it's pretty cool, but it's all because where the consumer is. Mobile drives all of that opportunity. And so that's where it is. It's following the customer who shops differently than he did 10 years ago. So we'll talk about some of the, how I think about it, at least, how this kind of plays itself out and what's happening and then what to do to protect yourself in this. There's two industries that are coming together. Whether we like it or not, software and payments are a head-on collision. And you can look at it in the strategic moves that are being made by big companies out there. First Data, right? Look what they are doing with Clover. That's software. And then payments happens behind it, right? You can see those things happening in that. You can see it happening on the other side. Anyone ever hear of Shopify or MindBody? More than half of both of those companies' revenues are on payments, even though they're software companies. So you're getting it on both sides. Global payments, what are they buying now? You're an analyst, what does Global Payments buy?
Global Payments just bought a healthcare ISV.
Right.
They expect 60% of their revenue to come from SaaS and not from transactions in 2 years.
Right, so morphing into software companies. There's really two formulas that are winning. This is it. There's only two ways to do it. You either power the full solution, so you're the embedded payment provider inside it. I think Stripe's the greatest example of that. This is where we play at Paya. We do this on the business services side. But you power the full solution. Or the other is you deliver the full solution, right? And that's where you can see the difference between the two different strategies playing them out. Some companies are doing a little of both. But those are the ways to win. And those are the only two strategies that anybody's employing right now. It's some version of those. Now, a lot of people are getting deep into different verticals around these types of things, which make a lot of sense. But it's one of these two. There we go. Customers are everywhere now. This is not just about someone who walks into your door, right? The poll that Chester just did, we talked about, when you talk about customers all over the world, we're not talking about just Visa and MasterCard. Right now, as we go market to market, how the consumer wants to pay is totally different. In Canada, just Canada alone, 50% of the transactions are not done on Visa or MasterCard. Right? It's all done on their debit. It's all done via Interac. Right? You go into the Netherlands, it's all ideal. Right? You go into Brazil, you're basically you're giving out loans to every transaction that happens because of the way the the way people buy in different markets is totally different. And so as you're in the space, you can't think about it only as Visa, MasterCard. You can't think about it only as what happens here. Because most of the businesses I work with now, they don't want to sell just in the United States. They want to sell wherever they are. And they obviously realize they want to provide a tender that their end user customer actually prefers to pay with. And these new customers, they're not just doing retail. And this is, to me, my big theme when I talk about mobile. Mobile is one piece of how somebody shops. They go into the store, they go into the kiosk, they go all over these different places in order to figure out what's happening. So just thinking about mobile as a standalone medium is not a great way to think about commerce as it's going. It is a piece of how commerce happens. It's a very important piece because that's where the consumers are shopping now. And so that's how I think it all kind of brings it together. I love mobile conferences because they bring a lot of great people together, but I hate it when it's isolated. I find very, very few use cases anymore that are mobile only. And when you start to think about how it fits in, over half of all the in-store sales are affected by what happens at the on a mobile device. Whether it be your PC or what have you. It's all influenced by what's happening in the digital economy. So digital first is the way I think about it. That can be mobile, what have you, but it's all about where consumers are. So I keep going back to that. So what this forces the ecosystem to do is change the way we think about the business. When I first started in the industry, there were these very defined swim lanes. This is what the card networks did. This is what the acquirers did. This is what the issuers did. This is what the gateways did. And now everybody wants to get closer to the business or closer to the consumer. So when we went from the world of swim lanes, now we have everybody in one big kiddie pool and trying to figure out how they can get closer to the end user customer. So what it really drives you to is thinking about how partnerships can help you get to where you want to go at the end of the world. There are some really weird partners today that 5 years ago you never in a million years would have seen happen. You would have never seen partnerships with Chase and Visa. You never would have seen a partnership with PayPal and Visa. I mean, there are some very weird things happening now because everybody's trying to figure out how to get closer in the world of digital commerce. So partnerships become a big piece. And the other big thing to think about is all of the dollars that are chasing this. You've got to retrofit an entire retail and business ecosystem to move to the cloud, right? And then you've got to figure out how to have the tools to do business in this new ecosystem. And so all this fintech money is chasing this. You've got strategic investing by the big guys. You've got private equity and growth equity jumping into this. And there's a lot of money out there right now, all chasing this. Are we in a bubble? Yeah, we probably a little bit are. But when you look at the investment that has to be made in fintech over the next few years to go where, to kind of move where the puck is going, you can understand why all this money is chasing it, right? The strategics are chasing, I don't have the assets to compete in these areas. When you look at some of the deals, why did TSYS buy Cayenne, right? Why did First Data buy Card Connect? Why did Grubhub buy Level Up? That's because they didn't have those assets. They knew it would take them too long to get there themselves. It's hard to buy, build something in some of these markets. It's easier to buy yourself there, especially when debt's so cheap today. So we're going to continue to see these acquisitions. I mean, actually, probably the greatest one I can think of, as I'm looking at the slide, is Chase's acquisition of WePay. They couldn't figure out how to underwrite a merchant in 2 seconds. Okay, well, these guys figured it out, so we'll just go buy them for $400 million. So those types of things people are doing and putting their money behind it, which really tells you as you're building your businesses or wherever you play, growth is important. That's what's going to pay for value. So distribution and technology in segments that have growth that are following these headsets and wins. That's to me where I think about the puck. That's where I think about putting assets together. So to me, the winners kind of come pretty simply when I look at these strategies. Leveraging payments and software together, and as I think about it, thinking about it in the areas of verticals, right? So you can think about it on a macro level like a Stripe, where you can think about how do I do that in healthcare, or how do I do that in insurance, or whatever verticals you happen to be in. Everywhere and every how. These consumers are everywhere. They're looking for different places of connectivity. I mean, I can't sit here and not talk about Adyen and say, okay, how did this company that 5 years ago nobody ever heard of become a $15 billion company and come up with doubling their volume last year, because they just did an announcement this week. Where'd these guys come from? Well, connectivity everywhere. That's what the business is wanting, right? And you got to follow a consumer. This is I'll use the buzzword, an omni-channel world. And see, we've got to compete in an omni-channel world. It isn't about mobile. It isn't about point of sale. Interestingly enough, I think the e-commerce guys are the ones best positioned because they were in the cloud to begin with. It's hard for a physical guy to figure out how to get to the cloud. It's much easier for a cloud guy to get to the physical world today. Follow the consumers. You got to go where they are. And I think partnerships are key to making these businesses grow. You can't do it alone. Very few folks can kind of pull off what a Square did. You got to have a ton of capital to be able to do that and just kind of do it on your own. Almost everybody else has found partnerships in the way that they've kind of grown to some level of size and scale. And you can see even some of the bigger companies out there are starting to do that. And my favorite, distribution always wins. If you grow, they will buy and they will pay a pretty penny for it. Technology in and of itself doesn't really do much. Technology coupled with distribution and scaled distribution is worth a lot. And so that's the way I think about putting assets together and really kind of winning in the new world of commerce as far as I've seen it grow over the last 25 years. So that's my pitch for the day. So thank you guys very much. I'll throw it out if anybody's got any questions. Okay, great. Thank you all.